everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. Well, it was a short week of trading this week, and we started things out with a warning from the S&P on the U.S. credit markets. But that wasn't enough to stop stocks as we've continued on higher during earnings season. And we're going to start out a little different this week. We're going to start out with the IBD 50 portfolio. We had one heck of a week there. We made some good money. And then we're going to follow it up with analysis of the U.S. dollar and, of course, the commodities and the U.S. Treasuries and the stock market. We'll follow through and see what the forecast is for next week. And we'll begin with our IBD 50 portfolio. The way this works is we started out on January 28th, 2011 here with $10,000. And we put it into 5 stocks, $2,000 apiece, and each week the worst performing stock is sold and a new stock is added to the portfolio. And our holdings going into this week in order of performance. Last week we had Tempur-Pedic coming in first place, starting the week out this week at $57.80. Second place last week was Spreadrum Communications, starting the week here at $20.51. El Paso Pipeline comes in third place every week, $36.51. Endo Pharmaceuticals in fourth place and battling it out, knocking out the original stock in the portfolio, Continental Resources. We started with Endo Pharmaceuticals here at $40.21. And the new addition to the portfolio, it's Cena Corp. 17 shares we picked up of that stock, starting the week here, $124.56. Let's see how we did. And our number one performer this week, for the third week in a row, it's Tempur-Pedic. Well, this stock is red hot. I guess that more bed bugs out there means that we sell more mattresses and make more money. We started the week at $57.80 and closed the week $61.73. Total value to portfolio added $180.78. Let's take a look at the chart. And the chart continues to look strong down below. Point 1 shows stochastics. They're moving higher in overbought territory, but they continue on. And so we gave that a green mark. Point 2 shows that the MACDs, they continue to rise, and the histogram bars, they're following too. So we gave that a green mark. Up top, relative strength index, it continues on, has plenty of room to go. Looks good, gave that a green mark. And coming in number 2 this week, it's Cena Corp. And it's the new addition to the portfolio. We started out at $124.56, closed the week at $133.06. Total value added to the portfolio of $144.50. This stock had a lot bigger gains early on, and we lost a lot on Friday, but we still held on. Let's take a look at the chart. And the chart of Cena is weakening a bit here after we've taken that big hit here on Friday. But we had big gains earlier on. Point 1 shows stochastics. They're neutral. They've been crossing here in overbought territory. We're going to watch that closely. If these start to fall below 80, it's probably going to turn red real quick. Point 2 shows that the MACDs and histogram bars, they're both beginning to weaken too. We issue a little caution there. We gave this one a yellow mark as well. And up top, point 3 shows relative strength index is beginning to dip too. Gave that one a yellow mark. A little caution with Cena Corp. Easy come, easy go. And the number 3 performer this week, it's Spreadrum Communications. And it was a nice week for Spreadrum Communications, despite coming in third place. Started out at $20.51 and closed the week at $21.69. Total value added to the portfolio of $138.06. Let's take a look at the chart. And the chart of Spreadrum Communications down below point 1 shows that we're a little overbought on those stochastics, so we gave it a yellow mark. And above that, point 2 shows the MACDs and histogram bars, they continue to look good, so we gave that a green mark. And up top, the relative strength index, that also looks good, so we gave this one a green mark. Overall, I think we're going to have another good week for Spreadrum Communications. And so that only leaves room for one more stock in this portfolio. One of the stocks is going to remain, and the other is going to get sold. And the first stock up, it's El Paso Pipeline. El Paso Pipeline has been coming in third each week. This time it's fighting for survival in the portfolio. And it's also the senior stock in the portfolio now. And the second stock up, Endo Pharmaceuticals. And coming in, number 4. And remaining in the portfolio, it's El Paso Pipeline. And so El Paso Pipeline survives the portfolio and remains the oldest stock in the portfolio. And we started the week out $36.51 and closed the week at $37.17. And we added $36.30 to the portfolio. Let's take a look at the chart. And we got a competitor here with El Paso Pipeline. It's looking pretty strong down below. 0.1 shows stochastics reaching into overbought territory. They look strong though, green mark. 0.2 shows the MACDs and histogram bars. They're confirming the stochastics. They look good too. Gave that a green mark. And up top, 0.3 shows that we're trending higher in the relative strength index. Looks like we're going to continue on in this portfolio, El Paso Pipeline. And so Endo Pharmaceuticals is out of here. And so Endo Pharmaceuticals started the week at $40.21 and closed the week $38.88. Cost us $69.16 in this portfolio. Let's take a look at the chart. And the chart of Endo Pharmaceuticals, it really shows the damage down below. 0.1, the stochastics continue negative. Gave that a red mark. And above that, 0.2 shows the MACDs and histogram bars. They're looking weak too, and they're heading lower. Gave that a red mark. And up top, relative strength index, that's declining. Gave it a red mark. Overall, it's a good thing to get out of Endo Pharmaceuticals as we're walking away with a 6.5% profit. And so there's a new stock in the portfolio this week, and that stock is Altera Corp. And Altera Corp closed the week at $45.99. Has a market cap just under $15 billion, and it trades about 5.5 million shares per day. And it's a telecommunications company. It's a complex telecommunications company too, so I don't know, maybe you understand this stock. I don't know, but I understand the charts. Let's take a look at the chart. And maybe you can see what I'm talking about. Chart looks pretty good. Down below 0.1, stochastics, they're reaching higher and look strong. Gave it a green mark. 0.2 shows where we got the MACDs. They're crossing, giving a buy signal. And the histogram bars, they're looking bullish too. We gave that a green mark. And up top, the relative strength index, that's reaching higher too. Gave that a green mark. 0.4 shows we just had a breakout too, like that. And we've got earnings coming up this week. At the end of the close on Tuesday, we're going to watch for that. I'm expecting good things from Altera as the chart looks good and all signs point to an upside. And going into the week this week, we got Tempur-Pedic, third week in a row, coming in first place. Total value in the portfolio of $2,839.58. And we've got Cena Corp. Total value there, $2,262.02. And Spreadrum Communications is taking the third spot, $2,537.73. And El Paso Pipeline, the senior stock in the portfolio, remaining in the portfolio for another week, and it looks strong too, $2,044.35. And it's the new addition to the portfolio, Altera. 44 shares we got of that stock. We closed the week and starting the week here at $45.99. Total value there, $2,023.56. We're carrying $114.75 in cash in the portfolio, and a total value $11,820.19. That makes us up about 18%, almost 18.25% since January 28th. Doing pretty good here. And you know, these stocks have got to perform or else they're out of here. economic mechanics for the week, and we do this every week by analyzing 3 key relationships. And first, the US dollar and commodities move in the opposite direction, and point 2, commodities and interest rates, they move in the same direction. And down below, point 3, high interest rates, they're bearish for stocks. And we always begin by looking for where the evidence is pointing us, and we do this by looking for the number of positives and weighing them against the number of negatives and coming to a conclusion that way. And we'll begin with the US dollar. And as we begin the US dollar, before we do the analysis, I wanted to bring up this chart here. This is our monetary base, and you can see the damage done here. Back in 2008, we only had $850 billion in currency outstanding. And as you can see, just over the past several years, we're now up around just nearly about $2.4 trillion. So you can see we've definitely extended our currency base. And, well, if you understand supply and demand, you know that more supply equals less demand, and that weakens the dollar. And that explains a lot about what we're about to see. So let's take a look at the chart of the dollar. And the chart of the US dollar doesn't look good. Down below, point 1 shows stochastics. They're bearish. We got another sell signal. Gave that a red mark. And point 2 shows the MACDs. They're negative, and the histogram bars, they're below 0. Gave that a red mark. And up top, point 3 shows the relative strength index. That's falling. Gave that one a yellow mark. And the weekly chart of the US dollar doesn't look much better. Down below, point 1 shows stochastics are oversold. They continue negative. Gave it a red mark. Point 2 above that shows the MACDs, they're falling, and the histogram bars, they're negative, so we gave this one a red mark. And up top, relative strength index, it's declining, but we have a little support there. We're going to wait and see if we can catch some of that support. Gave this one a yellow mark. Overall, it's not looking good for the US dollar, but you see we've got some support there at the blue line. Going to wait and see if we can catch that support. I don't think we're going to get it. I think we're going to continue lower in the dollar. And summing the US dollar up, we analyzed daily chart and weekly chart. On the daily chart, we found stochastics and the MACDs. They were both negative. We gave them a red mark. And the relative strength index was neutral, so we gave that a yellow mark. And on the weekly chart, we found the same thing. Stochastics and MACDs, both negative, gave them a red mark. And the relative strength index was neutral and gave that one a yellow mark. For a total, we had 4 red marks, 2 yellow marks, and 0 green marks for the US dollar. And we take a look now at the commodities represented by the CRB Index. And down below, point 1 shows stochastics are reaching higher, and they're looking positive. We gave that a green mark. And point 2 above that, MACDs are turning bullish, and the histogram bars, they're climbing too. Gave it a yellow mark, but I think this is going to turn green early next week. And up top, point 3 shows that the relative strength index is lifting yet higher. We gave that a green mark too. And over on the weekly charts, down below, point 1 shows stochastics are positive, and we gave that a green mark. Point 2 shows MACDs, they're flat, and the histogram bars are flat too, so we gave that one a yellow mark. But up above, relative strength index, that's looking positive, so we gave that a green mark. And summing things up for the commodities, we analyzed daily chart and the weekly chart. On the daily chart, stochastics are positive, and we gave that a green mark. MACDs and histogram bars, though, they were neutral, so we gave that a yellow mark. And the relative strength index was positive, so we gave that a green mark. On the weekly charts, we found the same exact thing. Stochastics were positive, gave them a green mark. MACDs were neutral, yellow mark. And the relative strength index was positive, so we gave that a green mark. And for a total, we had 0 red marks, 2 yellow marks, and 4 green marks. And we'll take a look now at our 10-year Treasury yield. And on the daily chart, the 10-year Treasury yield down below shows stochastics, they're bullish, meaning that interest rates are looking like they're going to go a little higher there. And above that, point 2 shows the MACDs, they're bearish still, and the histogram bars, they're leveling a bit here too. Gave it a yellow mark. And the relative strength index up on top, that's turning a bit positive too, but we gave it a yellow mark as we haven't seen any clear direction yet. This means when interest rates are going higher, and when I say bullish, that means that that's negative for the Treasuries, and that the Treasury prices are coming down and interest rates are going higher. And on the weekly chart, though, down below point 1 shows that the stochastics, they turned negative, and they look like they're going to continue lower. MACDs turn negative on point 2, and the histogram bars, they're dropping as well. We gave that a red mark. And up top, the relative strength index, that remains neutral. So what this means is that the interest rates in the long term seem to be going down. And summing things up, for the 10-year Treasury yield, We analyzed the daily chart and the weekly chart. On the daily chart, looks like that interest rates are moving a little bit higher here, as stochastics were positive. We gave that a green mark. MACDs and relative strength index were neutral, gave those a yellow mark. Weekly charts were still negative, and stochastics and MACDs were both red marks, and the relative strength index was neutral, so we gave that a yellow mark. And for a total, we had 2 red marks, 3 yellow marks, and 1 green mark. And so this would mean that interest rates may be turning here and continuing up higher, as the weekly charts don't reflect that yet, but the daily charts are starting to move in that direction. So let's take a look at the Dow Jones Industrial Average. And to look at the daily chart of the Dow Jones Industrial Average, we see things look pretty good. Down below, 0.1 shows stochastic surging, gave it a green mark. 0.2 shows the MACDs, they're bullish, and the histogram bars, they're positive too, gave that a green mark. And up top, relative strength index is rising, gave that a green mark as well. Also C2, the blue line, we just had a breakout on the Dow, looks like we're heading higher. And the weekly chart of Dow Jones, down below 0.1 shows stochastics climbing, gave it a green mark. And above that, 0.2 shows the MACDs, they're still flat, and the histogram bars are too, so we gave that a yellow mark. But up top, relative strength index, that's moving higher, gave that a green mark. And so summing up Dow Jones Industrial Average, we analyzed daily chart and the weekly chart. On the daily chart, found stochastics, the MACDs and relative strength index were all looking good, we gave them green marks. On the weekly chart, stochastics were positive, gave that a green mark, and the MACD's histogram bars were still neutral as they were flat, gave that a yellow mark, but the relative strength index was positive, so we gave that a green mark. And for a total, we had 0 red marks, 1 yellow mark, and 5 green marks for the Dow Jones Industrial Average. And so we've been coming up with scores for the US dollar, the commodities, the 10-year Treasury yield, and Dow Jones. And we've been looking for where the strengths are and where the weaknesses lie. We've been doing that by adding the number of positives versus the number of negatives and coming to a conclusion that way. And this week, you see strength in the Dow Jones as we had 5 green marks, 1 yellow mark, and 0 red marks. And the commodities, represented by the CRB Index, look good too. We had 4 green marks, 2 yellow marks, and 0 red marks. And coming in third place this week was the 10-year Treasury yield. We had 1 green mark, 3 yellow marks, and 2 red marks. And in last place, as usual, it's the US dollar. We had 0 green marks, 2 yellow marks, and 4 red marks. And we'll take a look now at our market gauge. The object here is to be as far in the right column in positive territory as possible, and far away from the left in negative territory as possible. And coming in first place this week, we had the Dow Jones Industrial Average, and that's in the positive column, and CRB Index came in number 2. That's creeping back up a little bit higher from last week. Looks good. And the 10-year Treasury yields, they're starting to climb back a little higher too, and they should be as they're following the commodities. And the US dollar just continues to look bad, as it does look a little bit better. It picked up a pace from last week, but it still looks real negative for the dollar, and I think we're really headed for another leg down there. Well, that's all from this week, and things look pretty good out there for the stock market. Should be a strong week. It's looking particularly good in the commodity sector. Well, tune in next week. We'll do this again, but for now, I'm out of here.